76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt.
This is Brother Kim Carter. We just want to say thank you for reaching out to us, meeting our concerns and what we need to do. And I know you guys working hard on your side for the Carters, and that we are looking forward to be financially free.
Teach you how to increase your credit score. Teach you how to make more money at your current job or your current business. And then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Rondi Lambeth, and this is the School of Wealth.
Well, hello. Oh, I already got people sitting here waiting for me. I like that. You know, sometimes I get on here and it takes a few minutes before anybody shows up. So welcome. Now it just bumped up, I think, to 6 brand new people live. Cool. Listen, here's how it works. Today I'm going to be talking about taxes. I will also talk about credit if you want, whether it's personal credit or business credit. Talk about real estate investing if you like, a little bit of crypto, stock market. I just made a really good buy today, which I'll share with you a little bit later. So whatever you want, if you have any questions, feel free to type it in now. I will get to those as soon as possible. And looks like we're streaming 4K tonight. That's pretty cool. So any questions you have regarding credit, personal finances, or taxes, business questions as well, feel free to ask those questions in the comment, and I'll get to those. There is a little bit of a delay, just so you know, because we are using a software to broadcast in a bunch of different places. So let's get into it. Taxes, it's probably one of my favorite things to talk about. Why would it be my favorite thing to talk about? Boring taxes. Well, listen. Mr. Wonderful talks about money all the time, and he loves money. Loves talking about it, loves making it, loves sleeping with it, loves spending it. I don't love money. I love what money gives me. I love the freedom that you can obtain from money. I love the leverage and the options for money, but I don't really care about money. It's irrelevant. It's just a tool. Like, if I was a carpenter, I wouldn't say, I love my hammer. My hammer this, my hammer that. No. I don't think about money much. In fact, I rarely think about it at all. As in, like, how am I going to get it? It's like oxygen. When was the last time you were concerned that you might not get enough oxygen? That when you got home and you went inside your house, it might be depleted of oxygen. Or when you got in your car, or you went on a walk. Never. Like, unless you are getting like in a hyperbaric chamber, which is plenty of oxygen, but unless, you know, you're getting a submarine going down to the Titanic, you're not really worrying about it. Or getting in a spaceship, going to outer space or back. Right? We don't really worry about that. Why? Because it's everywhere. There is no limit to it. And the same thing goes with money. There is no limit to money. There really isn't. And the thing with money is it has to be moving. It's a lot like a river or a pool of water. If the water just sits there, nothing comes in, nothing goes out, everything dies. The Dead Sea is an example of that. There's also an enormous lake in California. Did you know the majority of California, like 45% of California was a lake, and they routed all the water around and it's dried up? Pretty cool. You look into that. I learned about that through Joe Rogan. They pulled up charts showing how that big part of California was this enormous lake, but they rerouted the water. So it just drained out into the ocean. So money's a lot like oxygen. It's everywhere. So if you get your money right, you balance your budget. You spend less than what you make, then it gets a lot of fun to figure out how you can make more. And see, it doesn't matter how much money you make, it matters how much you keep. And that was something I learned when I was a teenager from Wally Williams, the first millionaire I ever worked for at that time. Taught me as a teenager. Doesn't matter how much money you make, it matters how much money you keep. So you need to learn how to keep as much as you can. And that's what gave me the desire to start learning about taxes. So I like to talk about taxes because I think it's very cool. I think it's very creative. I love the creation of entities and structures and businesses and creating ways to write things off, because I feel to my core that when I write something off, I'm winning. I'm beating the IRS at their own game. The less money I have to give them, the better I feel. Isn't that crazy? But that's how I feel. You know, I was talking to a guy earlier today, and he's just like, I'm just so scared. I'm scared I'm going to get audited. I'm scared I can do this. I'm scared of that. I'm like, look, you don't need to be scared. The IRS has created this persona of the big bad wolf. But here's the facts. The IRS, the Internal Revenue Service, is a for-profit it's a non-profit corporation. The Internal Revenue Service is not part of the government. They're employees of the government, but it's actually a private entity. It's a Puerto Rican corporation, and you can look this up. The majority of the IRS agents, the people that work at the IRS, the majority of them work there because they were the worst students in their class. Think about that. You go to college for 4 years, and because of your grades, because you're getting bad grades, primarily because you don't understand it or you don't have the comprehension to do the math or whatever, memorization or whatever they judge you on, that the only place that you can get an accounting job is the IRS. Why else would you go work for the IRS? It's poor pay, nobody likes you, horrible work environment, horrible rapport. Unless you got a chip on your shoulder, why would you want to go work there? So the majority of people who work for the IRS, they are the dumbest people in their class. And that's why they went to the work at their IRS versus a big accounting firm where they could make many six figures a year and sometimes make over $1 million a year as an accountant for a big firm. So don't be afraid of the IRS. They're just regular people. They're the dumbest people in the class. Your tax attorney, your enrolled agent, probably knows more about taxes than they do. They're just filling out forms and checking boxes and dotting I's and crossing T's. So it's nothing to be afraid of. And what makes people afraid is they hear a story of someone that gets audited and then goes to jail. Well, you don't go to jail unless you commit a crime. If you make a mistake, they're not going to throw you in prison. They might fine you. But generally, I was on the phone earlier, or not on the Zoom call earlier with my tax coach. And when he started his business in 2007, he had made a mistake and checked the wrong box. And 5 years later, he got a bill from the IRS for $75,000. And he simply wrote him a letter and said, hey, I think I made a clerical error. I haven't made any money in this company. It was a startup. I did this for asset protection, blah, blah, blah. And guess what? They waived the fee because he asked nicely. So you can get a long way treating IRS agents nicely. Now you might say, well, that wasn't very nice to say that they were the most ignorant, the dumbest people in the class. I didn't say they were stupid. I said they were the dumbest people in their class, as in the lowest scores in their class. They're probably smarter on bookkeeping. I guarantee you the majority of the IRS agents know the IRS code way better than I do, because that's their job every single moment of the day. But as far as accounting, they're the bottom of the class. So if you hire someone who's at the top of the class, which you can hire out there, and if you just follow the rules, just don't be greedy. There's a saying that says, remember my first enrolled agent taught me this: pigs get fat, hogs get slaughtered. Don't be a hog. Be a pig. It's okay to write some things off. Imagine if there's an invisible line. Stay as close to that line as you can. Don't veer off in sovereign citizenship land. I was on a Zoom call yesterday, and the guy was talking to me about a private, copyrighted, common law trust, blah, blah, blah. I'm like, the IRS doesn't like those because it's tax evasion. Well, blah, blah, and he went off onto this thing. We've been doing it 75 years. And I said, look, that's fine. Give me just one case study of one of your clients surviving an audit out of thousands of people that you said you've sold this $100,000 trust to. For 75 years, you've been doing this. Give me one person that's been audited. Couldn't do it. Why? Because they won't give it to me, because the person that got audited got destroyed, because trusts are not tax exempt. In fact, trusts, I see Pace Morby, he's a big real estate guy. He talks about putting a trust at the top of his foundation. Trust this, trust that, trust this. It's the highest tax rate out there. It's 37.5% tax. And then any money you pull out of the tax, you got to pay. Any money that you pull out of the trust as a salary, you have to pay tax on it as well. It's ridiculous. It's almost double that of a C Corp. It's so stupid to put your trust at the top. It makes no sense unless you're trying to cheat. And guess what? The IRS will find you, because that's who goes to jail. People who are cheating. So what can you write off? And again, put in your questions. Any questions on taxes or business credit or personal credit or finances, or drive an exotic car for the cost of a Camry. Any questions like that, put them in. If I don't get any questions from you guys, I will take off early tonight. I'm on day 11, which is technically, I'm like 60, day 61 or whatever, 75 hard. So I am tired. I'm wore down. 2 workouts a day and all the other stuff that I got to do. I am wore down. So if you guys don't have a bunch of questions, I won't stay here flapping my lips unless you have a question for me. But I will go through a few things. Today's March 20th. Tax day for S corporations and C corporations was 5 days ago, Friday. So if you have an S corporation or C corporation and you did not file your taxes, you, my friend, are going to pay a penalty. Probably some interest plus some other fees if you did not file for an extension or file your taxes by last Friday. Next month, April 15th, is your LLCs, your partnerships, and your personal taxes are due. Make sure if you haven't filed an extension, if you don't think you're going to have your taxes done, file an extension. It's IRS Form 7004. That's IRS Form 7004. It's super easy to fill out. Put your name, your address, your EIN number for your business, the code of what type of business return you're going to do, the year you're filing tax extension for, which will be 2024, and put in how much money you think you're going to owe. And if it's an LLC or an S Corp or partnership, you're going to put 0, because those companies don't pay taxes. Only C Corps pay taxes. Nathan says, do you do tax courses? If so, where can I find the link? Inside, Nathan, inside of Fortress University. So you log into your app, either on your app or on your phone or however you get there. You log into Fortress University, and you dig around there and you'll see a tax course. That's where you're going to learn the tax course. So I think there's, I don't know, 2 hours, 3 hours of tax stuff in there, just basic stuff, basic things. There it is, app.fortressu.com. That's where you get to it. When I say basic, it's probably pretty advanced for most people, but it's basic when it comes to tax professionals. So let's go over a couple things you can write off, because there's not a whole lot you can do for last year. You can do contribution to your IRA, contribution to your Roth IRA, contribution to your HSA, health savings account. And that, my friends, about it. You can't do a whole lot now for last year without committing fraud. Because if you go and start post-date and stuff, that's illegal. So what can you do going forward? Well, if you are a business owner, whether it's a small business, a large business, medium-sized business, etc., and you have children, the children under the age of 18 or children under the age of 22 going to college, there's some really cool stuff you can do. For example, if your children are under the age of 18, your business can hire them as a model for your company. And you can pay your child under the age of 18 $15,000 a year for modeling services. Now, the call that I had earlier today, the guy's like, well, my kid's not a model. My kid's eight years old and blah, blah, blah. I said, have you ever seen an ad with a kid in it? And he's like, no, I haven't. I'm like, really? Not on TV, on Facebook, on Instagram? You've never seen a kid, picture of a kid? No. Like, how about the Gerber baby? Oh, yeah, I've seen the Gerber baby. You know, the family made $80 million from the Gerber baby picture? $80 million. So the next time your CPA says you can't hire your kids for modeling services because they're not old enough, what about the Gerber baby? Was she old enough to pose? Next time you get that value package that's got all the coupons in it that they send out to your house every month, open it up. The last time I did it, it was 30+% of all of the ads had kids or dogs listed on their ad. 30-40% of every ad had a kid on it. That's modeling services. I will ask you a simple question. If you were shopping for a new water heater, you don't know any plumbers, you don't know any plumbing companies, you're not going to go to Home Depot, you just need to get someone to come out and replace your water heater. It burned up. It don't work anymore. So you open up the value pack. And I see Vanessa's on here. Vanessa works with me. She runs the entire credit repair operation. Vanessa, if your water heater went out on your house and you had a choice, you got two ads in front of you. One was the guy standing there with his family, his wife and his 3 beautiful daughters and their little golden doodle. That's your one option. The other option for the plumber to come to your house as a stranger is just a picture of a water heater and it says, I replace water heaters. Where the other one says, I replace water heaters. And it's got a picture of their family. Which one are you going to pick? Which one would you pick to come to your home? You don't know them. The one with a family, with 3 kids and a dog, or the one that just says, I fix water heaters fast and cheap? Well, if you're anything like me or anybody else I know, you're going to pick the one with the family, especially if you're a single woman living in Las Vegas in a big 3,000 square foot house with 2 beautiful teenage daughters. You're going to have some random stranger coming into your house? Well, if you have to, but wouldn't you rather have one that's got kids themselves and married? Or a husband? Maybe it's a woman that's a plumber. Women generally don't get into plumbing, but they should. I mean, that is a money-making business, man. If I was going to start a business, guys, I would start a plumbing company. It is a cash cow. Maybe someday I'll do it. I doubt it because after my heart attack, I don't like working that much anymore. So I like working on the tax stuff, and that's about it. But if I'm going to start a business, guys, I would start a plumbing company because AI is not going to replace a plumber. It might in like 20 years, like in the construction world, like in the building the house. But as far as coming into someone's house and fixing it when it breaks, nah, AI is not going to fix that. So this is how you hire your kids. All right, here's a question. Thank you, Melvin. This constitutes any child being a model for said company, regardless if they're your own or not, right? Oh, yeah, it doesn't matter. Like what you're saying is, if it's not your biolog, I'm assuming you're saying this, and you know what happens when you assume things, right? But I'm going to take a risk here and assume that, Melvin, you're talking about a child that you have custody of or lives with you that's not your biological child. Maybe it's your girlfriend's child or your boyfriend's or your husband's or whatever. Like your stepkid. So it would apply. Now, is it any child? Technically, it is actually any child. I mean, you can hire anyone. When my daughter was young, she was a model. She did a lot of runway stuff. And she also twirled the signs back when that was kind of a thing, or when that was first coming out, sign twirler. She was like, I don't know, 12 years old, 13 years old. She was doing modeling. She got a paycheck, got a 1099, never had to file taxes because you don't have to file taxes under the age of 18 if you make less than $15,000 a year. Okay. So I think that answers your question. It doesn't have to be your child. You could hire anyone to do it. Like, the Gerber baby wasn't the Gerber family's baby. It was a random baby model. My friend Joe Bauer says this all the time. Put a family on your business card. Put a family on your website. And if you don't have a family, go rent one. He said, literally, go out to a park and pay someone $20 if you can have a picture with their family. And he's kind of joking, but he's kind of serious at the same time. So if you don't have a family and you're running a business, go hire some people, friends, family, as in your own personal like kid family. I'm sure you got cousins, aunts, uncles, or just go to the park and make sure you talk to their parents first before you start taking pictures with kids. I know that sounds kind of silly, but all right. Any other questions? Nope, not yet. So kids under the age of 18 that can make $15,000 a year, you can hire them from your company as long as it's not a corporation. So C Corp, S Corp, or LLC taxes an S Corp. If you have a corporation, you cannot pay your kids through your company without doing payroll taxes. So now you're paying 15.3% plus. Instead, you need to pay them through a sole proprietorship or your LLC that's not taxed as an S Corp. Then there's no requirement for payroll taxes, which is 15.3% minimum. So if you have an S Corp, what do? You simply set up a new company, a new LLC, and you do a contract between your S Corp and the new LLC to provide modeling services. And then the LLC hires the kids. So you transfer $15,000 per kid to the LLC. They do the work in the LLC, modeling, etc. And then you pay them through the LLC. Then you don't have to pay payroll taxes. Now, once they turn 18, if they go to college, you can do up to $35,000 per year through your LLC. $35,000. So I have a friend. His son is going to college overseas, and dad's paying for the college. And I said to him, I said, hey, why don't you make your son pay for the college? He's like, my son doesn't have any money. I'm like, why don't you hire your son? It's like, my son's overseas. He's in a different country. I'm like, why don't you hire him to manage your social media? You're always talking about how you don't have time to do social media. How about you just start doing a little bit of social media for your very successful nationwide business and have your son manage it and then pay him $3,000 a month? He's like, well, then he's going to have to pay taxes on it. No, he does not. He's in college. Tax write-off for you from your business, tax-free for him, and then have him pay for his own college. Now you're essentially writing off your kids' college. Isn't that cool? Doesn't that excite you? I don't know. Some people think it's boring, but I think it's really exciting. Like, I just took $35,000 out of my business, gave it to my kid, and my kid is now paying for college. And I got a $35,000 write-off. In my income bracket, that's a 50% savings. 50%, $18,000 savings if I had a kid that was 18 going to college. Now, my friend Joe, it is a 50%. He is more than 50% tax bracket because he makes a lot of money. So that's a big savings for him. So that's another thing you can write off. What else can you write off? I get that question a lot. What can you write off? The answer to that is anything that is reasonable and required, necessary, if you want to use that word, for your business to stay in business. Anything that is reasonable and necessary. So, would it be reasonable and necessary for me as a credit expert to go to a men's warehouse and buy this shirt and buy this suit jacket? Would that be reasonable and necessary for me as a credit and tax expert talking with you? Could I deduct this suit and shirt? What do you guys think? Type in your answers. I want to know what you think. Could I deduct my shirt and jacket if I was a tax professional or a real estate agent or an attorney or a credit expert or a mechanic or a race car driver? Can I deduct my clothing? Put in your answer, yes or no. Well, the answer to that question is no. You cannot deduct clothing. Nathan says yes, but it does have to have, but doesn't need your company logo. Just because you put a company logo on it, I like what you're thinking, Nathan. I like it. I like it a lot. You're being creative. Just because you put a logo on it does not mean you can write it off. Just because I have my logo, you can't really see it there, but inside there I have my name and logo in there. That's not the only requirement. It needs to be reasonable and necessary. See, the reason why you can't just buy clothing and then write it off is because you can just go wear it anytime else. I could wear this jacket anywhere I wanted to go. I could wear it to dinner. I could wear it to a movie, to a show. I could wear it for work. I could wear it to church. There's nothing about this that says fix your credit, reduce your taxes, right? So this technically, as is a piece of clothing. You can't just simply write it off. Now, can you potentially write off your clothing? Yes. Here's a couple things. Is it reasonable and necessary? And can you defend it? Because if you can defend it, you can deduct it. So what if I own a clothing store, whether it's online or physical? Then can I write off clothing? Well, is it reasonable and necessary for a clothing store owner to have clothing? Yeah, I would say it is reasonable and necessary. Is it reasonable and necessary for me as a credit expert to have a suit and tie? No. Maybe it's reasonable, but it's not necessary. Now, can you write it off? Yes, through a uniform, but you need to be able to defend it. Now, how did I write off my suits? Because I talk about that. One, they have my logo. Two, they have my name on it. both my company name. I also put things here. You can kind of see it there. And then in my bylaws of my company and my minutes, it says that any shareholder or director of my company out in public must dress in a suit. Doesn't say I have to have a tie on, but it does say I have to wear a suit. Slacks in a jacket. Must. So it's written in my bylaws that I must do it. That helps me write it off. Now, when I have it done, it's as a uniform. You can't see the back of my shirt, but it actually has the name of the company across my shoulders. Kind of like a jersey, you know. A lot of guys wear jerseys with other men's names on it, which I've never really got into that. I'll wear a jersey with my name on it, but not some other man's name. It's just not my thing. Not judging, just not my thing. So clothing's really hard to write off, but if it's required or necessary and reasonable, sure, you can write off. So behind me is a couple pictures of some company vehicles. So that's actually a picture of my Jeep there. There's a picture of my actual airplane. And then my Toyota Tundra is there and my Ferrari. So those are actual real vehicles. And I write off all of them because they're reasonable. Is it reasonable for a owner of a company to have a vehicle to drive around to make sure you can go from appointment to appointment? Yeah, that's reasonable. Is it necessary? Well, not necessarily is it necessary. I guess I could do Uber. But it is necessary for me to have a vehicle, and I don't want to spend all that money on Uber. And what if they don't show up? And then I got to get in the back of their car. Now I'm covered in dog or cat hair or cigarette smoke, and I got to deal with some guy that barely speaks English. I don't trust them. They might get in a car accident on the way. You know how many times I've been pulled over in Uber? Surprisingly, a lot. Been pulled over in Uber. Tail lights, no blinker, etc. So is it reasonable and necessary to have a vehicle for your business? I think so. I would defend that, and I deduct it. How can I write off an airplane? How's that reasonable for a credit expert to have an airplane? Well, I do a lot of speaking engagements that are in areas where I can't just get on a plane and fly there. It would take me all day to get there. For example, if I was going to do a speaking engagement tomorrow in Bend, Oregon, I would have to go to Boise to probably Seattle to Portland to Bend, and then get an Uber or a rental car. And it would probably take me 12 to 16 hours. I could drive there in 7, or I could get in my airplane and fly there in an hour and a half. And so is that necessary and reasonable? Yes, it is. So anything can be deducted as long as it's reasonable and necessary for your business to survive. Is it reasonable and necessary for an attorney to have a sailboat and write it off? No, can't come up with any reason why an attorney or a real estate agent needs a sailboat. If you're a sailboat captain and your business is sailing lessons and taking people out for sunset dinners on the ocean every night, is it now reasonable and necessary? Yeah. So's alcohol. So's all the food. But alcohol just for an attorney because he wants to get drunk at home, can't write that off. Now, if the attorney rented the sailboat to take clients out and did a little presentation while on the boat, then maybe he could write that off, and like most likely he can. So hopefully that helps you guys. I hope it helps to kind of see how you can get creative with that, because a lot of times when you talk to your CPAs, these people are so stuck in boxes. If you ask them stuff, they're like, no. I mean, I saw a CPA last week on Instagram. He's got over 1 million followers. Did a video and he said, you cannot. The IRS specifically says you cannot write off golf. Well, what if you're a golf pro? What if your entire business is golfing lessons at the golf course? Where else are you supposed to teach your golf lessons? At home in your backyard? How else can you make money for your business if you're not at a golf course? Of course you can write off your golf membership if it's reasonable and necessary. Now, could I write off golf? No. I can't write off a golf membership or a club. My country club membership, I can't write that off. If I had a golf business, then I could, but not as a credit and tax expert. I can't write off golf. Now, if I really wanted to write it off, how could I do it? This is the part that I love. How can we do it? See, that's the thing I like to, that's my response when someone says, can you write this off? Well, I don't know. Let's figure out how we can write it off. So if you came to me and you said, I want to write off golf membership, my country club membership, how do I do it? I would say go there and find out if you can sponsor a hole. Go there if you can sponsor a dinner. Go find out if you can sponsor a bulletin board. What type of sponsorship marketing opportunities they have at this country club. And then you sponsor that, and then you have them throw in the golf membership with it. But you're not paying for the golf membership. They're just throwing that in. They're sweetening the deal. That's the cherry on top. Here's your golf membership, the cherry on top. You pay $100,000 for the membership. For the sponsorship, you get the membership for free. Isn't that cool how that works? See, it's not boring. It's not boring at all. All right, guys, I don't see any more questions in here. I've been flapping my lips for 35 minutes. I hope you all have an amazing evening. Feel free to reach out. Hope you're doing well. I will not be here next week. I will be on a business trip on the way to Hawaii. I love my business trips. They're some of my favorite things to do. If you haven't figured out the business trip game, you need to be creative. Just make sure that when you go on business, you spend at least 50% of the time, which is 4 hours and 1 minute per weekday you are traveling. Let's see. Someone asked a question. Is it a write-off? Is my business trip to Hawaii a write-off? 100% of it is. The airfare, the hotel, the food, the drinks, everything I spend money on. Now, the entertainment's not. The meals are 50%, but I still get to write them off. The hotel's 100% deduction. The airfare is 100% deduction. Why? Because it's actually a leadership conference. And as a leader in a business, as well as I'm on the board for a nonprofit, which is actually the one, it's their conference I'm going to. It's a nonprofit board membership leadership. So yeah, it's tax deductible, the whole thing. So fun times. All right, guys, that's a wrap for the night. Hope you have a great day. See you later.